to the Stock Market Morning Prep video for Thursday, March the 6th. Consolidation day in the markets. Dow Jones down 35, Nasdaq up 6, S&P down 10 cents, Russell down $2.74. Very, very quiet day yesterday. Markets are consolidating now at the upper end of this range from this previous move. To me, it's quite bullish. Now, when we have a lot of volatility, it tells me that we're ready to vacate the area. Obviously, it doesn't tell you which side, but I wouldn't doubt if the market actually indeed pops higher. We have a target of, in the E-mini S&P of 1877.80. It does not surprise me if we don't get there today, or even tomorrow for that matter. But remember, tomorrow is non-farm payrolls, one of the biggest economic data released and most followed. Usually sets the trend for the month, so that's something that we want to make sure that we listen. It comes out at 8:30 tomorrow morning. And remember, guys, be a little bit light going into non-farm payroll numbers because you don't want to be waking up by a big surprise here. Markets go the other way. I personally, I don't know. I don't see much of a surprise. I think that the markets are just literally have gone parabolic, and there's really no stopping this train unless something really seriously, there's some sort of a big catalyst, because until the Fed really shakes up the market, I think that's really what's going to take it, is the Fed starting to rattle the markets. When the Fed is accommodating, you know, they've reduced their asset purchase by $10 billion. That's a drop in the bucket. That's absolutely nothing. So, you know, Yellen speaking, saying that we do not see an asset bubble in the marketplace. Well, she has to look really in front of the computers to see that this market has gone vertical. Stocks have doubled and tripled in the last year. Not healthy. The markets are fairly valued, excuse me. So there's no discount here. There's nothing. There's nothing here that you're buying. Oh, the markets are cheap. Not the case anymore. They're fairly valued. And what I mean by that is that tells me, and I should tell you, that do not be adding to your positions. Remember, if you're a longer-term investor, obviously, or a swing trader, you know, if you're swinging for a day, 2-3 days, holding position, obviously that means nothing. You can do as you wish. But when you're a longer-term position trader, or you're trading your IRA, you don't want to be adding to these at these lofty levels, because when that does happen, risk moves fast. Risk off moves fast. And then you get caught holding the bag here at these lofty levels. So just a word of caution. That does not mean that the markets can't continue to go higher. Remember, the trend is your friend. You want to be buying good quality stocks on pullbacks, on any type of consolidation. Don't be looking to short the market. If you're hedging, that's one thing. Hedging is fine when you're hedging up at these areas. You know, put protection is very, very cheap. You know, you can buy puts. The volatility has collapsed, so that makes the put premiums very, very cheap to purchase. So just keep that in mind, okay? All right, so let's go right into it. I'm not going to spend a lot of time, but I definitely want to show you a couple of sectors that I've been watching, and you all know about the three that I really like for 2014. They're really starting to play out really well. First of all, McClellan Oscillator. As we all know, the markets are overextended. They're all fairly valued, but this is a good indicator to find out what is the current state right now. And as you can see here, we're in neutral territory. So to me, the markets have additional room to run to the upside. Now, when this market pushes higher and we indeed get above 70, 80, and we start breaking out of this Bollinger Band up here, that's going to be my cue. If you wanted to fade the market, if you are a professional and you know how to fade markets, remember, if you're new to the game, do not be doing this. This is not an easy trade to accomplish. So, you know, if you're looking to pop up, and or if you are looking for a short, that would be your cue that, hey, we might be looking for a reversal the next day. So just a heads up, want to show you, we still have plenty of room to run to the upside. As crazy as it may sound, I agree with everybody. Markets are out of control, but remember, we're not here to criticize. We're here to make money, and that's the bottom line. No matter what we think, we're here to make money. And keep your thoughts and your comments and any type of ideas you have about where you think the market should be at. Just put that off to the side. Trade the market, trade the price action, and you'll be very successful doing so. All right, just wanted to show you guys. Here's a 5-minute S&P. Now, as a trader, okay, or an investor, you should know, hey, there's nothing to do here today. There's absolutely nothing to do. Markets and stocks were literally sideways. So that means that we are in a consolidation from this large move we had the other day. That is bullish to me, okay? If the markets cannot even sell off because of that, that's a very bullish sign, guys. So that means that the markets have a little bit more room to the upside. Now, I do see that the markets are tired. You know, when you're looking at price action all day and you see the markets, they move lower. Like if you had this little move lower, everything moves lower quickly because people are nervous. They're thinking, oh, could this be it? Could this be it? And they, sure enough, this is just a bull flag. But you see one down tick, almost all stocks I see, boom, 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 they're all moving lower. So just be cautious here, okay? Because I could take it as a contrarian here that that we have so much euphoria of buying. Nobody cares. Just keep buying and buying and buying, and that's a recipe for disaster. To me, anyway, I'm not looking to do that. I'm looking to pick a good setup. So there's nothing to be had, and as you can see, there's nothing here yesterday at all. Very, very quiet. Okay, now here's the yen. This is where it gets interesting. All right, now bonds. I'm not even going to show you picture bonds. I will show you that three stack of stocks that I showed you before on a TLT. But the bonds itself is now moving lower, and so is the yen. Now, that is what we were looking for, right? We were saying we had bonds going up, we had the yen going up, and we had stock market going up. No, no, no. Can't happen. Well, it can for a couple of days, but you know what? The relationship is inversely correlated to U.S. equities. That's what the concern is for me. Now, if bonds and the yen go lower and stock market's high, that's the right correlation that we should have. Although I would be excited if the S&P was at 1,500 or 1,300 or even 1,600 for that matter, but I still wouldn't get overly excited that we're at almost 1,900 in the S&P, and we have gone vertically. We have traded, I believe, 22 out of 24 days or 21 out of 24 days, something ludicrous to the upside without even a pullback. Now remember, guys, we also haven't had a 10% correction, I think, in almost 2 years. Just this current pullback was only 5%, and that was literally for 5 days. I mean, that is just crazy, and it's going to end bad eventually at one point in time, right? But nobody knows when, and who cares? We just want to trade the right setups. But I'm telling you, this euphoria buying is a big, big concern of mine without any type of rest or a pullback. But anyway, let's get back to the charts. As you can see here, the yen. Now, this is it. There's a line in the sand here. If the yen starts to break lower, okay, and then your next spot is going to be this pivotal low. A break of this pivotal low, this would send the markets ripping to the upside, okay? So just keep that in mind. Watch the yen, okay? You could watch the yen ETF if you had to, if you don't have the feed for it. Here's the daily chart. Now, this is another reason why what I'm watching, you can see we're elevated. But let me explain this to you. The RSI, stochastics, even MACD, if you're looking at it, this is just a good reading of overbought, oversold on a daily chart. But remember, when stocks are up, elevated like this, and strong, they're going to stay elevated for quite some time at the upper end of the range, as you can see here. We had this dip, we moved lower, and as you can see here, we continue to move higher. But what happened from here? This was a perfect sign of it. This area here, this top, what happened? Although we were moving sideways slightly up, look at the RSI, look at the stochastics. They were all moving lower, meaning that there was weakness in the market. And sure enough, boom, we had it about, maybe 8, 9 trading days later. So read it the right way, right? Don't, we're overbought, no big deal. Read the right way, we're overbought, and we continue to be overbought as we're moving higher. That means you have a strong market, okay? When you have a dip here, you had that little dip lower, sure enough, came right back. But when you had this area, you could see, once it starts breaking below that 70 line, okay, and 80 on the stochastics, you see that we have lack of buying, and sure enough, we broke lower, and now we're back up again, and we're staying elevated, which tells me we have new buying coming in here. So we have, obviously, the retail crowd came in last week, mutual fund inflows for, believe usually comes Thursday, Friday, and then Monday, Tuesday a little bit, and then it starts to taper. But look what's happened. And sure enough, we had that, and now we are still elevated here. So this is actually, believe it or not, a good sign. Yeah, the market's overbought, but can stay overbought for quite some time. Okay, that is not a sell signal. All right, just want to make that clear. Next, 1 hour, hourly chart of the ES. Here is the extension. We hit that literally by 2 points. So 118.77, 1880 is going to be your spot. Now, if we break through that, I'll have to redo these numbers, and then I'll look for a new set of numbers here, new Fibonacci retracement 1272 extension for the next upside target. Okay, but remember, look at what's happening on the hourly chart. We have all the moving averages lined up perfectly and moving higher. Okay, when you had this here, we had that little blip up. But remember, when you have this is not too bearish at all. So would not be looking to short the market. And if you don't feel like buying it, take a step back and see what happens. All right, here's the TLT. excuse me, TLT came in, but gold really hasn't moved lower, and TLT hasn't really moved lower. Now bonds did move lower, and they're off today about 6 ticks in the pre-market session. So let's see what happens here. If we start to break out, and gold, bonds, and yen break lower, that's going to be your cue, your sign to start saying, hey, for a short-term swing trade, I could start taking some longs again. That's what I mean by that. I mean, I meant, previous videos. If the markets are giving us mixed signals, take a step back a little bit. Don't be holding positions. But if the markets start unwinding that, and then give us some positive signals saying, hey, gold's lower, TLT's lower, yen's lower, consumer staple stocks, some of the utilities are starting to move a little bit lower. That means that they're telling me that risk on is happening again. So that's a good sign. Okay, so let's keep an eye on this as well. Now spiders, and here's the thing here on the indices. They have plenty of room to run to the upside before the next consolidation. We've taken out the previous high here. So the next step, really, believe it or not, is going to be the upper end of these channels. Here's the spiders, 190. Here, take a look at the IYT. Transports, 140. I mean, we have plenty of room to run. Yes, we did have dropping volume, really not confirming it, but that could easily change in a matter of days. So again, plenty of room to run. And look at what's happening here. Bollinger Bands are tightening. That means that there's energy building in this leader, the transports. Okay, look at the Russell. Russell, same thing, upper end of the channel. So there's plenty of room to run to the upside, and the McClellan oscillator stating that we are not overbought in the short term tells me that we can move higher. Now remember, again, non-farm payrolls are coming out tomorrow. Could change everything. News does trump the charts. If Putin gets aggressive again with Ukraine, all bets are off to the upside. Absolutely. Look at the cues here. Look, cues are tightening, telling us again more room to run to the upside. Diamonds, same thing. All right. Now, didn't quite take its high out, but remember, it's a laggard, so it's doing what it should be doing. Now, again, here's the GLD holding above the 200. Now, remember, this has now changed in the short term from bearish symmetry to now bullish symmetry. We are still in a bear market. Don't let anybody fool you. Look at the monthly chart. You take a look at the 8 and the 21. We have still crossed over. When that crosses back to the upside, that will relieve any downside pressure and put us back in a bull market. But right now, the monthly chart dictates where we are in gold, and we are still in a bear market, just having a monthly retracement. Okay. All right. Now let's go take a look at some of the other indices. USO. Obviously, to be expected, a pullback in USO because of the fact that tensions starting to loosen up here in the Ukraine and Russia. Obviously come in, but this is what you want to see, right? No trade in USO at the moment, but we have a lot of good trades that we're looking at long in the oil sector stocks, the energy stocks. All right, so that's the 200-day, looking for a pullback back to the 200. All right, now let's take a look at some of these sectors. Here's the OIH, the oil services. Schlumberger, Halliburton, Baker Hughes, not going anywhere. There's money flows coming into this sector, guys. I want a deeper pullback, and again, I'm going to show these to you every day, but I want to show you that we're above the 8. We're way extended above the 20, so I want to see this come back at least to the 20, somewhere around here if we can, and then get an opportunity to buy. Here's the Schlumberger. Back in here would be perfect. Come back in again, but look what's happening. Look, little doji's not going anywhere. Even when the market's not doing anything. Here's the oil and gas, and again, I like that Valero. Take a look at Valero. Beautiful consolidation at the upper end of the range here, guys. I mean, that's a very, very good sign. Let me just disconnect this real quick. All right. Sorry about that. So anyway, this here you get Valero. I like it. I would like it to consolidate a little bit more at the upper end of the range. But remember, guys, be patient on these stocks that you're looking for. XLE, again, dial down into the XLE. Look for the 2, 3, 4 best charts and start watching them and hawking them and see where your entry may be. Home construction. Now, the home builders, had some negative news out on one of the home builders, and the home builders came in a little bit. That's exactly what you want. You want to be looking for a better buy-in in the sector. You don't want to be buying up here. You want to be buying on a decent pullback. So just keep watching these home builders. They're doing well. As you can see, money is definitely flowing into them. Lennar, same thing with Lennar, holding in here. Pulte Homes, one of my favorites. Getting a little bit better where I like it to see. Maybe we get a little follow through here to the downside a little bit, and then we can buy this back in here. This is where I like to buy the KBH, right back in here, $19. Let it come in a little bit more and start nibbling in the KBH. Now, I've been talking about the banks. Three sectors that I really, really like for 2014. As you know, the builders, the banks, and of course solar. Now, I didn't bring all my solar charts out yet, only because solar has been they've been a little bit iffy. They've been consolidating, and they actually had a big run up already. So I'm waiting for pullbacks to show you some solar charts. I'm going to probably end up showing them to you next week sometime, just to get a small little bunch of charts out there. Maybe take out the energy for now, since it's consolidating. I don't want to put too many charts out because we have a small window of time here on the video. All right, so the XLF, take a look at that. You see how it's starting to break higher? Now, this is a very good sign if you're a bull. If you're a bull, this is a very, very good sign, guys. Why? Well, because we have the banks following suit. When the financials, you can't get a real good rally without the financials leading. All right, and they're a great trading vehicle too, by the way. Here's Citibank again, really aggressively getting into that 50. Now, we had a big move up for 3 days, so my guess, if we could break out and then back test this area of 50 and consolidate for another 3-4 days, that's going to be a great opportunity to look to buy it on when it vacates out of this consolidation. Of course, this is just hindsight right now. When it does, and if it does, you want to look to buy Citi for a big move to at least test these highs here up at these areas. JP Morgan doing well, but chopping around here, but nothing wrong with it. Nothing wrong with it. I think the better stocks are going to be Goldman Sachs. As you can see here, really great follow through, and that's going to be here. Now, if you miss this, if you miss Goldman, right? Look for a pullback back into the 167 area. That's going to be a great opportunity to look to buy into Goldman. And then, of course, lastly is Apple just consolidating here. Now, this is what you want to see for the Apple traders out there. Apple is a consolidation stock, right? We consolidate and then we vacate the area, either go up or down. Same thing here, same thing here. As you can see, boom, we blasted higher. Watch Apple here above 535, 536. If it takes this out, then Apple should at least challenge this area here, which would be this this uptrend channel right up in this area here, and that would probably put you right around 572. All right, so keep an eye on Apple. Okay, guys, remember, non-farm payrolls tomorrow. Don't get overly bullish and add a bunch of positions until non-farm payrolls come out, okay? And then, obviously, once that's away, the risk event is has passed, then we can start looking at position for the month. All right, have a great day, everybody. Enjoy the day, and we will speak to you tomorrow.